Britam Asset Managers is part of the Britam Group, and the Britam Group has been in existence in Kenya for the last 50 years. We originally started out as a life insurance company. I think for many of our customers, that is what they would know us for. But since then, the business has evolved. Britam is now a company that is present in 4 business lines. In insurance, both short-term and long-term insurance. We have a subsidiary that is focused on property development, both for the insurance balance sheet and for third parties. We also have a strong banking portfolio, owning almost half of housing finance and about 9% of Equity Bank. And we also have an asset management arm. So those are the 4 lines of business that Britam is present in, and we really see ourselves as a diversified financial services group rather than just an insurance company. Britam is comprised of 11 companies in all those business lines, and we are spread out in 7 countries in East and Central Africa. So we cover the width of the entire East African region, including South Sudan, and we also have a strong presence, actually market-leading positions in Malawi and Mozambique as well. So it's a well-diversified group from the point of view of the financial footprint. Britam Asset Managers is a company that I lead. Our core mandate is asset management, and we were set up in the year 2004. We were set up primarily as a retail-focused asset manager, managing money for high net worth individuals, and to some extent the mass market as well. And the company has had a very good track record from the point of view of mutual funds or unit trusts, which are CMA-regulated investment vehicles. We've been running these funds since the year 2005, and to date we're the market leader in unit trusts, with a market share of about 25% in the Kenyan market. The business made the decision around 5 years ago from today to then venture into the institutional space, and this is really managing money for segregated mandates, institutional pension funds, managing money for governments, NGOs and that kind of thing, government parastatals. And we've done that to tremendous success. And I think now as we speak, we are talking of assets under management of 94 billion shillings by the end of December 2015. We're currently just about to cross the 110 billion shilling mark as of September 2016. And a lot of that growth has come through from our pension funds. I think they have been quite happy, number one, with the strong brand, the strong and experienced team, but most importantly, the strong investment returns that have come through. So my own sense, having studied the business and participated in the growth of the business, has been that the learnings that we have picked out of the retail investment environment have been the same learnings that we have been able to apply to great effect on the institutional side with respect to service, with respect to systems, with respect to people, but most importantly with respect to investment returns. I think that has made a big difference transiting through. So my sense is that the large milestones are around the evolution of the business, going from retail to institutional. Secondly, around the systems that we've been able to bring on board. And lastly, from the point of view of the very strong service that we've been able to offer our customers. I think also certainly a large milestone for the business was at the end of last year when we crossed the 100 billion shilling mark in terms of assets under management. I think in terms of innovation, it can be in 2 ways. It can either be market-led or it can be regulator-driven. I think we've seen an attempt at both. If I start with the latter, which is a regulatory-driven framework, we have then seen the regulator come out with very many acts and regulations that govern new instruments. As an example, they came up with the CIS Act, which governs unit trust schemes and collective investment vehicles in the early 2000s. And largely that has been adopted by the market. We also saw the CMA, or the authority in this case, come out with asset-backed security regulations more than 10 years ago. And to date, we're yet to see a single product come through that is asset-backed. We've seen the authority put out some regulations around REITs, real estate investment trusts, around property, about 3 years ago. And to date, I think we've only had one REIT listing on the exchange. I know that there's a lot of work that they're putting in around exchange-traded funds. There's a lot of thinking that they're currently doing now around derivatives, as we spoke about earlier. So those are the regulatory-driven developments, which to some extent some have been successful and some have not. On the other side, you then have the market-driven innovations. And this really is born out of the insights of fund managers, and again is born out of the response that we have then seen due to customer needs and what we've seen as customer-driven behavior in the market. So there's a huge need right now for, especially for high net worth retail investors who have more of an aggressive risk appetite, where money markets and fixed income are concerned. So we certainly then need some sets of regulations that would address that kind of investment. We have seen that for many Kenyans, they are very keen on investing on land and property. So are the REITs regulations the way to capture that investor appetite? I think it's been a mixed reaction thus far. So we certainly then need to have the right set of regulations that can then capture that entrepreneurial appetite where property is concerned. You look at private equity, a lot of Kenyans are entrepreneurial, they set up their own businesses, they want to invest in these businesses. So again, I know that there's some work being done on the regulatory front. So again, for us as asset managers, it has behooved us really to have a mix of both, where we have looked at what is out there that is being driven by a regulator, and we've tried to make sense of it in the form of coming up with products. And at the same time, we have also seen that there are some developments which have run ahead of regulation. And even for that slice of business, we've tried as much as possible to design products that can then capture that kind of appetite. But for me, innovation beyond just looking at products is also about things like cross-selling. It is about margin enhancement for the current slice of AUM that you have. And enhancement and innovation in Kenya certainly also means being able to anticipate and allocate your customers into alternative investments. So this is property and this is private equity. And because private equity and property are longer term investments, these are investments where the amounts of investment needed are larger. These are investments certainly that then carry higher risk. Then there's a potential for a better margin where asset management is concerned. So at the moment, I would say that it's, in terms of a business model, the general advice is not to really go for a single product line. It's to try to be as diversified as much as possible. And within that diversity, try to build sufficient levels of expertise within every business line to allow one to be able to gain scale, which I think is the approach that Britam Asset Managers has taken so far, with some success so far to date. Right.
Now, we recently passed a new law capping interest rates and also putting a floor on what interest depositors could be paid.
Right.
A lot of the discussions about this have revolved more around the impact this is going to have on the banking sector.
Right.
But interest is something that affects, all types of investments.
That's right.
If you were to look broadly at what the impact of the new interest rate capping is likely to have on the investment, on the investment market, what would you point out?
My sense is that if you do look at what is happening with the banks are going to lose a significant minority of their net interest income. That means they're going to lose out on at least 20 to 30% of their net interest income. And you are obviously going to expect to see less profitability come through from banks and returns on equity coming down by 30 or 40%. In response to that, for a lot of banks, they have either made the decision to either increase their volume of lending or to then increase on what they call their non-funded income. So going for more transactions, payment solutions, going for more mobile banking, and really slowing down on any new investments into CapEx, new branches, and so on and so forth. I think that has really been the message that has come through. If you do look at what is happening from the point of view of the general investing public, both in terms of the retail and institutional side, I think the message is good, because certainly we've then seen that a floor has been put where deposits are concerned. So I think the minimum rate now is 70% of the KBRR. I think that is what has been approved. So we have then seen that for banks, these are simply increased the cost of funding. But for investors, certainly now there's now a floor for your money where savings and time deposits are concerned. On the asset management side, I think there's certainly some level of an opportunity here, because for a lot of the banks, we don't really expect them to want to pay up for deposits, especially because their entire cost of funding has gone up. So there's certainly a smaller opportunity now for asset managers, investment managers to be able to take on board both retail and institutional money and manage it a bit more efficiently where returns are concerned relative to those kinds of benchmarks. I really do see that now beginning to happen. You may also find that some level of credit rationing then begins to apply because for banks now it's a bit more difficult to risk profile customers based on the interest rate capping, the amendments to the Banking Act that have then come out. So again, for a bank, the issue is, if everybody is 14, then, does that make sense, and so on and so forth. So there could be an opportunity for especially SMEs, medium-sized corporates, even large corporates, to begin to turn to the capital markets as a way of diversifying their debt capital structure away from just relying on bank lending or bank funds. So we could start to see more interest, in things like corporate bonds, commercial papers, corporate notes, just as a way of getting more debt into these companies, which certainly, again, is an opportunity that we then do see in the asset management space. But globally, I think if you look at net interest margins, I think Kenya was always found to be on the upper end where these margins are concerned. So there's certainly a rejigging of business models where the banking sector is concerned. And for asset management, those are obviously some of the things that we're then grappling with going forward. There's certainly also some danger on the asset management side because it is the same banks that we were investing some of our deposits with. So it really requires calls for more innovation on where asset managers are concerned to begin to focus on more active asset management and not just putting money into deposits. So obviously more active allocations are required around whether it is government securities, listed equities, and some of the alternative instruments like private equity, property, and so on and so forth. It just means that from an innovation perspective, even the asset manager now has to be more innovative because you simply cannot just rely on high returns coming through from bank deposits.
Finally, we've spoken a little about, your strategy going forward. But if you are to fast forward, Britam Asset Managers, the next 5 years, what picture would you paint of what the company would be in 5 years' time?
I see a business with more than 250 billion shillings of assets under management. I see a business that is very well diversified between retail business, institutional asset management, and alternative products. I see alternative products making up at least 10 to 15% of our revenue. I do see a company that is now diversified into the region with offices and clients, not just in Kenya, but in Uganda, Tanzania, and Rwanda as well. I also see the company as a very strong contributor at that point to overall revenue, profits, and dividends to the overall Britam group. And I really see Britam being a market leader in as far as investment excellence is concerned, in as far as innovation is concerned, and most importantly around the adoption of technology, and especially mobile technology as an engagement channel between ourselves and our customers, just to bring closer that engagement that we have with our customers. That's really what I look forward to in the next 5 years.